Seasonally, the Dow has gone through a series of pullbacks every August, as we see into July of 2013. We had a minor retracement, a minor pullback, a retracement that failed, a retest. That was September of 2013, and then into August of 2014, we had a pullback, a larger retracement into September, and then a fairly large drop into October. Moving on to 2015, volatility expanded dramatically here. We see the last week in July, and then boom into August. So we came off of a high going into the close of July, third week OPEX, at 18,137. We traded down to 16,459. Pretty substantial move, right? Nearly 1,500 points. We then traded back up into early November and traded towards Christmas, and then came in the beginning of the new year with a fairly substantial drop from 17,750 all the way down to a double test of 16,000. Here's the second test, which made a low at 15.5. The first test was 15,450, so we were 50 points higher on the second test. Coming into 2016, we see we had a steady decline beginning second week in August and continuing until October. From that, we have rallied from a low of 17,883 to a high of 22,000, roughly 180. So a pretty significant rise. We've left a number of gaps on the chart below, significant ones down here. So this is the seasonal pattern for the Dow Jones. Let's go over to the YM and take a look here at what we're going to be observing this week. We have a daily line in the sand at 21,565. We break this, it opens up the potential for these two support levels, 21,322 and 21,228. If we look at a few of our indicators here, our relative strength index is turned back down into the close, and we'll discuss Friday in just a moment. Our MACD is flattening out, but again, lagging indicator. Friday was a bit tricky, and our faster stochastic is crossed and turned up. Our commodity channel index has been seeing lows struck in the 200, minus 200 area. So we want to be watching, the 300, 325 pull for confirmation strength. And I think we're going to see that. But first, I think what we will see initially is a retracement, potentially. And that retracement is shaping up to look like perhaps a tap of the 21 period moving average at 21,695. So we're looking at least a 30% bump here, potentially on a reversal. And then if we are to go ahead and pull out and look at what that might look like on a larger scale in retracement, and remember, these do trade. We're going to go ahead and pull from here on down to the low and see where the retracements could potentially run. and we'll see they line up pretty nicely with our EMAs. So we have our first resistance at 21,727, our second at 21,791, and our full halfway back on the prior high to low at 21,843. So how is it shaping up shorter term? We're going to have to wait and see if this trades. This would be our initial, let me draw that a little further. Our initial profit target would be the 21,622 low again, and then we could go to and through that to the downside very easily. So let's see what that looks like. Let me clear all this, and then let's go ahead and draw this in reverse. Okay, close enough. Let's go ahead and pull back here and see where we end up aligned. So we have a 21,503 as a potential profit target, close to a very nice round number of 21.5. We could in fact see a bounce there, or we may just blow down and visit the 21,319s. This is what's open and on the table. It is a Monday. They are low participation days. It is an easy day to whip things around. And there are plenty of protection went on Friday. So looking for a reversal is not a big stretch. We aren't that deeply extended from our EMAs here. We did congest, we got across, and we're starting to spread. Last time this happened, you saw we ran from a high of 21,749 down to a low of 21,622, and significant. 21,749. 21,622, or roughly 130 points. Could we come back in and pull back up to the 710s overnight on the Sunday session? I believe that's what they might target for a gap and go, and I would envision it to be something on the order of a pro gap and go. Moving on to the ES. Similar picture. Now the Dow, or YM Dow, INDU, has led on this rise in 2017. It has remained the leader, dragging the ES, which is quite often not the case. So we've had the Dow leading, greater participation here, right? The ES has followed suit. Presently, I am keying off the ES as the Dow is lagging once this downtrend began. So, excuse me, if we were to simply go back and look for a high to low retracement here in the ES, which again is our leader, we would be looking for, excuse me, we would be looking for the potential to trade up to the 24.35 to 24.45 with a potential at front run of 24.60.75, and that target has been and remains the 24.59.75. So we've got some room for some shake and bake here. This was a very ugly candle on the daily. I wouldn't say it closed at a point of indecision, but buyers were absent. I think a lot of this was some protection squeeze going on to the weekend. Could we see that continue into Monday? Potentially. It's going to be fascinating to watch. We're going to want to watch the as well. We're going to want to watch the 2419 and pull this back. We'll move out to the hourlies, and I'm going to provide some targets we need to watch to the downside for reversal potential. Obviously, the prior low in the 2419, and then we're going to add several more here. 2417s would be good, and then my last support here in and around this level was the 2413s. So any of these are violated coming into the overnight session tonight to the downside, or after, I would say, 10 a.m. tomorrow morning. Could be early tomorrow morning, actually. What may occur is we may have a drop into these minor support levels, and then a rip and reverse around, well, I don't know. Depends on when this is done. If it's done prior to the opening bell, I would say after 10. If it's done prior to 8 a.m., I would say prior to the opening bell we could see that reversal. That's one potential here for a retracement. We tend to trade somewhat, if you look at this on the hourly, we tend to build cause here, and we built some cause in here, right, after this drop, and we traded up and then back down. So presently we're a little bit sandwiched here into this range, right? I'm going to draw this right off the tops. So we're 20, I would say more along the lines of the 2439, 2440. In here is where we are trading, and actually we could probably take that right up on top of that one. It's not going to cooperate, but in any event, you get the idea. 2440 down to the 2419, 17s. This is where we're hanging, and it's fascinating. We're going to get a break here, and the break is either going to favor a retracement to build cause and energy for further downside, remove protection that was put on, or just a big whoosh and continuation. I think that's coming. I think that's developing. But I think we have to be on guard for a potential retracement here. So it's best to sit back, be patient, and observe. And let's see how this range resolves. Whenever these EMAs get extended like this and then slightly recompress, we can get some fairly wild action in here. Not that it's going to lead back to another cross, probably something more like this, maybe more like a compression into failure. And I would think, today, well, tomorrow, this is Sunday, but tomorrow, the 21st, we are a good 2 weeks out from Labor Day, so I think they're going to want to potentially conclude a lot of this prior to Labor Day. Maybe the retracement occurs prior to Labor Day. I don't know, but I would be looking for one. From where is the real question, but there is some serious selling pressure here. There's volume behind it, and we need to be on guard, right? Got some buying in here, which was unusual, but to be expected. I think that was, again, algo-driven force buying on protection that was added, and then further selling. But if we look, the selling, we've got to watch the selling and see where it dries up. I wouldn't say it's drying up, but it's definitely diminished. So we're setting up for a retracement of some type. Depending on the magnitude, we'll be able to get a little better indication as to where this is all heading into Labor Day and what that conclusion might look like. We had some important lines in the sand earlier. Remember those. They are potential deep retracement targets. They're not significantly on the YM. They're not materially lower, I would say, in terms of where we're looking, but it's significant enough they're going to cause some pain and create some fear. And then where it all goes from there, who knows? I mean, we've seen in 2013, 14, 15, and 16 deeper retracements that extended into October in several years, 2016, whereas they didn't in other years. So much is to be revealed. Patience should be exercised, and I think we'll get a much better handle on where this is headed into Labor Day, whether we'll see a much deeper retracement, panic's dead ahead, and how it plays out. There is an extreme amount of bearishness out there at the moment, and it's going to resolve. Thank you so much for watching. Have a great day.